pleasure to have special guests with me here today. Jeremy, founder and CEO of Grit Metals and Nexus Uranium. Jeremy, it's a pleasure. Please, if you could introduce yourself and tell us a little bit about what you do.
Jorge, thanks for having me. It's a pleasure. I've been in the capital markets for over 20 years now, primarily focused in mining and metals, but we have done some special situations from time to time as well, primarily on the financial financing side of things. I found myself in the CEO role once again after previously being part of a company called Bearing Lithium, that project, which was a lithium project in South America, in Chile, and that we sold that to Codelco for just shy of 300 million US. So a big believer in the critical minerals, primarily uranium, lithium, some of the rare earths, but just as we continue to try to onshore these supply chains and for these critical minerals, I think there's a tremendous opportunity for everybody involved.
Could you walk us through a bit about Grit Metals, Nexus Uranium? You said you consider yourself junior miners. Could you tell us where you guys are today as a company?
Sure. With Grit Metals is a project in Finland. It's in central Finland. It's next to a lithium project called Calibre that's owned by Sibanye, which is a New York Stock Exchange listed company. That lithium mine is scheduled to be online in the back half of 2026. And we spent about $4 million on proving up multiple drill targets, and we expect to start drilling sometime in March 2026. Nexus Uranium is a uranium company with its flagship asset in South Dakota, and we're just waiting on drill permits for the government there so we can hopefully prove that the mineralization moves south and put together a large enough land package for a potential standalone project.
Before we dive into kind of the technical of your projects, could you just tell me a little bit about your background? How did you find yourself in the mining industry?
You know, it was more of the public markets that I went into about 20 years ago, and it was on the marketing side of things. So I really understand how important it is to get out and tell your story like I'm doing today. You know, make sure that you're introducing the company to new investors and new people, and to make sure that you have liquidity, because without liquidity, it's tough to raise capital. And then from there, my first board position was on a company called Pure Energy Minerals that was a lithium project in Nevada, which again was sold. But prior to that, we actually did an offtake deal with Tesla, and then my career kind of kicked off in a big way from there. And then since then, I've been still, capital formation, backing companies and raising capital, but also taking some board and management positions as well if I'm really excited about the project.
So you've built companies across very different capital cycles. And as you know, that's always the challenge with junior miners. It's always a challenge in all around the entire mining industry. Capital can be tighter, definitely for juniors also. What do you think about the capital scarcity today? More importantly, how do you distinguish between capital that one should take versus capital that could actually hurt the company in the long run?
Yeah, great question. I mean, there's an old adage that you should always take the capital if it's there, but there is a fine line between looking at what's the dilution, to shareholders, can we use this capital to hit milestones, create value for shareholders? That's another thing that you want to look at. But at the same time, specifically with commodities that really do run in cycles, you do want to raise capital while the capital's there. So, and then, if you do that and you can prove out a real asset, that you can ride through some of the downturns if you have the money. But it can be difficult sometimes to try to navigate through which capital to take and which capital not to take. Furthermore, on that point, you also have certain different funds or different institutions or retail investors that are looking at different things and having different priorities. Like is it a hedge fund that wants to strip a warrant? Is it a retail investor that is just in for the quick trade? Is an institution that's taking a long-term view on the space and on the commodity. So there's a lot of different things that you need to consider. Or is it a debt instrument, right? And are you able to pay back that debt? Does it have a convert on it that'll hold your stock down? So there's just like I said, a ton of things to consider when taking a look at getting capital.
Yeah, and in terms of taking a look at what you have to take into consideration, like whether you can actually pay it back or not, what would you say is like the biggest challenge that capital unlocks? Would it be like the actual drilling, the exploration, like the setting up camp, like the machinery? What would you say is like the biggest milestone? And once we receive the capital that it should be funded into?
Well, it really depends on what your particular project is, right? And what stage of project. Do you have a brownfield development project, or do you have a an early stage exploration sort of concept project, right? And then you have the issue with some management teams just taking the capital and not spending it in the ground. So, it just depends on. I think it's always a good idea to make sure that you're well capitalized if you can, but that you also have clear goals and clear deliverables that you're going to spend the money on that you think is going to create value for shareholders. But I'll give you two different examples. One example would be if you have a pure exploration story and you drill and you miss, and perhaps your geological model was wrong, or then that you still spent the capital where you were supposed to spend the capital, even though you didn't get the result that you wanted. If it's a brownfield site, maybe you're spending money on not only doing some confirmatory drilling, or in lithium, we had to do pump test to test the porosity because it was a brine project. Or sometimes you're spending money or doing both. Sometimes you're spending money on the community, right? And community relations, because
Mhm.
now with mining, one of the most important things that you have to deal with is just the communities.
Yeah, the social licensing is really important. And I mean, we can definitely talk about what is the best practices to make sure these communities feel like identified with the mines and actually feel comfortable with us going in and actually helping us work with it. You mentioned something about knowing when to keep spending versus when to shut things down and wait. So what would you say are the real signals that you look for as a CEO that tell you it's time to pause activity and preserve capital rather than to push ahead?
One of the issues you have now is government and political issues, right? So you need to make a call as the CEO and as a board and as a management team sometimes says, can we work in this country? Can we work in this state? Can we work in this county or township, right? So sometimes, if the permitting regime or just the is too difficult to deal with, then maybe you need to preserve your capital and you need to look for a project somewhere else where it's more capital friendly. So that's a factor, and that's one that's becoming, probably in my career, I would say that's one that's really changed, specifically in North America, and let's just call in the West, as it used to be that those you were pretty confident in the regulatory environment, and you'd go to more difficult jurisdictions and for higher risk projects. But now even in the West, permitting has become a real issue, and you do need to make that call: is this a place that we can deploy capital and get a return for our shareholders and move a project forward? So that's one thing. And then, so I
Hmm.
do think the other thing you really need to be aware of is just what's the commodity price doing. And you can't live with the commodity price day to day. You have to look for trends, and you're really making a call, because you could say, oh, the commodity price could be down, and you could say, um, I let's not spend any capital because the commodity price is down and all the stocks are down, and then it could bounce back 3 weeks later or a month later or 2 months later, and it's like, okay, well, maybe we should have kept deploying capital, right? So you're trying to make educated calls. You're trying to take in as much information. You're trying to talk to as many analysts and experts as you can in the space to figure out what's going on, because there is long-term downturns in commodities as well. So really you're trying to weigh all of those factors. And once you determine that, hey, maybe we are in a downturn for, let's say, I'll just use an example, copper, which right now is, I think, in a cycle where it's actually turning up, and I think it's really exciting.
Yeah.
And I'm not a CEO of any copper companies, but I think I'm very, very bullish on copper in itself. But if you determine that, hey, I think it's topped and that it's not looking good, and I've talked to a number of people, and our stock's been cut in half, maybe you do look at conserving some capital and waiting for that to wash out and for copper to start moving higher. But it's very difficult because sometimes you'll be in the middle of a
Yeah.
drill program, or sometimes you'll have raised money and made representations to people. So you still have to. So there's a lot of different factors to weigh out, and it's a difficult job, but we think we do a pretty good job.
If you're in the middle of a drilling program, you said, and the copper prices just go down, and you have to take a pause. I mean, there's really no other option for you than to just stop drilling, right?
Yeah, I mean, at that point, you're moving forward, right? And it also depends on how much capital you have in the bank account, right? So if you move something forward and you define a special asset, there'll be capital for it even in a down cycle. So you're not all, again, you're also looking at that. I just if you get, let's say, mediocre results, the commodity price has been cut in half, the market's not looking on the medium term less bullish, then maybe you do preserve capital and live to fight another day. Because that's always what it comes down to, is like, when are you raising your capital? If you're raising your capital when your stock's at an all-time low, it's going to be quite dilutive, and it's going to be tough moving forward to create value for shareholders. But if you're doing it at, let's say, your highs, then it's less dilutive, and it can be really accretive for shareholders. So there's a lot of different things to manage. You're never perfect, but you're always doing your best to sort of weigh in all of this stuff.
That must be a lot of data and there's a lot of information incoming. Is there any way that you guys are conducting data analysis, predictive analysis, or predictive modelings where it allows you to take better decisions?
Well, we wouldn't be doing our job if we weren't, right? So as I said earlier, you're trying to talk to as many analysts, you're trying to read as many notes as you can, you're trying to gather as much information. It's funny, I'll use lithium as example. When I started in lithium, there was no spot price, right? It is an industrial metal. So we're talking 10 years ago, we'd have to figure out the lithium price by sort of backing out the financials of the big producers. And then there was a company that came along. They've done a great job. They're called Benchmark, and they've really sort of specialized in providing that data. So now there's more access to that data specifically for lithium, for example. So but for gold, there's a spot price you can see every day, and you're trying to intake as many articles as you possibly can. But there's, even when gold's down, there's people that are bullish on gold, and there's people that are bearish even when it's high. So there is a data of analysis, but ultimately you're trying to gather as much data as you can, and then you're trying to make a call. And further to that point on the call, you can't be married to a call. If you make a call and you're wrong, and you need to deal with that, and you need to change your viewpoint, and maybe change your behavior, or change what you're doing with one of your companies and your investors' money. So it's a constantly evolving thing that you're working through, and it's like I said earlier, it's never perfect.
That's definitely the characteristic of leadership that's really important. Being able to pivot and take decisions that really align with the organization. So that's really great. For this upcoming year, is there any particular desired outcomes or goals that you guys are looking for? Is it completing drilling, and beginning the extraction? Any particular goals that you guys are looking to achieve this next year?
Yeah, for Grit Metals, like I said, we've spent a lot of money in Finland. We have good relationships there. We're right next to a mine that's currently being built. And we're looking to drill out these drill targets. We have some really, really good drill targets. We're just signing the agreements with the drillers and finalizing with the geologists. And, there should be some news out in the next, let's call it 30 days on the announcement of that. We expect the drill to be up and running sometime in March. And we're going to prove, I think we're going to prove up some significant lithium occurrences that we've seen at surface. So we're very excited about that. And then on Nexus, it's a brownfield project in South Dakota. We're waiting on our permits from the state, and then we hope to be drilling sort of late spring, early summer.
What is something that these investors are looking for beyond the pitch deck? What are the particular risks that they are looking to alleviate? And what would you say would be the best steps to take when looking to initiate a capital raise for junior miners?
I would kind of put it back on the investor. What is the investor looking for, right? Right. So, it's not necessary. It's, depends on them. Some of them are looking to trade, right? Some of them are looking, like I said, if it's a hedge fund, they might be looking to strip a warrant. So they're gonna sell the stock, and they're gonna hang on to the warrant. Some of them are making a long-term bet on a commodity, or on a management team, or on an asset, for example. So it really depends on what the investor is looking for on that one. And then once you can figure out what they're looking for, and then you can say, okay, well, what do we have and what are we looking for? You can sort of marry the two up. You definitely want to canvass the marketplace before you announce any sort of capital raise, and you want to have some lead orders, or working with some people that can have the ability to write checks, especially in down times. And then once you have those lead orders, and you've got some indication of interest, you want to announce that financing, and you usually want to get it closed as quickly as possible. If you're doing a brokered financing as opposed to a non-brokered financing, you're going to have that brokerage firm probably help a little bit more. There's a lot of different factors to consider, but one of the things you have to consider is, well, what is this investor or particular investor looking for?
Even if someone's ready to invest, maybe it's not the correct type of investment. Maybe you're looking for a convertible loan, and they're looking to take over operations. They want to take over the mine, or trade. Is there any talk about artificial intelligence and how it could potentially benefit your operations at all? Is there any talk about how you're looking to use it in your mining operations?
Yeah, the AI has been around probably longer than people think in the mining space. We started seeing it about 4 or 5 years ago, and I think what it does is it helps you data aggregate. So, for example, if you're trying to if you have a lot of data or surface sampling or near surface kind of drilling or just overall even prior drilling data, and you're trying to figure out, well, where should we target next? Where's the unconformity? Where's the structure? Whatever it may be, the AI can really aggregate that data and help you come up with your drill targets quicker than, for example, maybe a human could, or a human geologist entering it into, some sort of a leapfrog model potentially. So that's an area where we've seen AI really help, is just in the whole data aggregation side of things. Just is quicker and we'll see if it's better, but it's quicker and it probably is efficient, if not more efficient than some of the other ways that we've been doing things. But that's all I've really seen. At the end of the day, AI is not going to build drive a drill rig out to site and set it up on the ground and replace a drilling crew, at least not at this point in time. So yeah, that's where we've
So
seen AI make a difference.
it's definitely not here to replace any of those. It's true. It's been it's been around for a really long time. Is that where you guys are seeing like the use of AI and like in through just the data governance and lineage, or is there any other like aspects where you guys are looking to use it for your mining operations?
I think that you're seeing it more on the corporate side of things. Like I had just mentioned sort of where I've seen it the most in the mining side of things, but I definitely seen it on the corporate things, like people are obviously using it for corporate documents, some legal documents, some press
Mm.
release, some financial reporting tools and things like that. So I've definitely seen it on the corporate side quite a bit. And I think that'll probably continue. I mean, I think that's where, I'm no AI expert, but I think that's what you've seen a lot of the experts talk about, is like that's really where you're going to have the effect, is that it's going to be able to help you navigate through rules and regulations. Like you can go online now and you can type in a sort of, for example, you could type in TSXV or CSC rules on a particular type of financing, and it'll give you a full rundown, where before, you would call a lawyer and have to get that information. So you should
Oh
obviously still
yeah.
double check things with your lawyer, but that's where I've seen it really implemented.
You mentioned that the drill is the ultimate truth teller, but it introduces risk. I just wanted to ask about, from target selection in terms of drilling, sample handling, data integrity, where do you see junior companies most often create risks for themselves during drilling, and what best practices must they really matter in the drilling stage?
That's another complex question, just because there's so many different factors that go into that. For example, you know, well, I've drilled holes or been involved in companies that have drilled holes all around the world. And, drilling in Saskatchewan in the Athabasca region for uranium is a lot different than drilling a US low-grade uranium deposit in, let's say, South Dakota, for example, where Nexus is, right? So, one of them has a lot of historical data, which that'd be the one in the US. And it's lower grade, of course, but it's shallow, it's cheaper drilling, and you're pretty confident going into your drilling that you're going to find. It's just going to be sort of what grade, how far does the mineralization extend, where's the water table. So those are some of the things that you're going to, and you have data on all of that. So you have sort of an idea of where you're going to hit that for sure. But that's much different than, drilling 1,000-foot holes in the Athabasca, on a property that's goes on for 1,000 hectares, and you're trying to find mineralization that's the size of, let's say, 2 football fields or 1 football field on, down 800 meters or 700 meters or 500 meters. So it's a completely different game depending on what kind of drilling and where you're doing the drilling and how much data you have, right? Once you hit that mineralization, for example, in the Athabasca, and then you're just stepping out and trying to figure out which direction it goes and how how large it is, right? So it just really depends on what kind of drilling. I know that's not probably the perfect answer that you want to hear, but
No,
that's
it
really the
is.
truth.
It's good to keep it high level. It's there's so much to go to like consider. But yeah, like I mean, I'm sure like if we get into like the actual details of how many different ways we could reduce risk, I mean, we could probably talk for hours. So yeah, it's good to, it's
Yeah,
okay to keep it high
and
level.
Yeah, and sorry, and I guess one other thing just to answer that, you're obviously doing geophysics. You're potentially, depending on what kind of projects, you could be doing gravity. You're going to be generally, but you could be doing trenching. You could be doing grab samples. In Finland, we do on grit metals, we do a lot of companies do bottom of till, which is basically you're sort of just really, really shallow drilling just underneath the surface, right? So, and that helps define your drill targets based upon that data. So, you're doing all those things, of course, trying to come up with the best drill targets. But at the end of the day, there is a certain level of risk, and depending on the project, it has higher or lower risk. And for example, we were involved in a copper project in Arizona, and it took 45 days to drill one hole because it was a big copper porphyry, and you're trying to drill down 1,500 feet, right? So it just really depends on the type of project. But sometimes the more difficult drilling, for example, could be a much larger reward. So it's kind of a risk reward situation. Are you dealing with something that could be really, really big asset, or are you trying to confirm something that could be a smaller asset, right? So there's different things to consider on that as well.
Please, if someone wanted to get into contact with you or learn a little bit more about what you guys do, what is the best way to communicate with you or learn more about you?
You can obviously visit Nexus Uranium, or you can visit Grit Metals, grit-metals.com, and there's info emails there. Or my corporate email is jeremy@nicofinancepartners.com. I can be reached there. You can see most of my phone number on most press releases on either one of those companies. So yeah, we're always looking to talk, and interested people that have any questions on either company or anything in the mining space.
All right, sounds good. Sounds good. Absolutely. We'll leave your website, your email down there. We'll leave the contact information down here. And all right, thank you again for hopping on this call with me, and it was really a pleasure talking to you. Thank you so much for being here.
Anytime. Thanks, Jorge.